श्रेयस कहाँ गया आप?
हाँ सर।
हाँ,
Yes, sir.
स्टार्ट कर सकते हैं।
करें सर स्टार्ट।
लोग ज्वाइन करते
Start.
रहे मेरे ख्याल से। हाँ, वो अभी
हाँ सर
नंबर
स्टार्ट कर देते हैं।
जाए। श्योर।
So good evening all. Today is the second session of the special initiative which has been taken by Dr. Sudhir Bhave and the team in this year for the doctor wellness. As we have discussed about physical, emotional, and financial wellness in the last session, we had a topic related to physical health and calorie and how to take care of our health and issues. This time we have come up with an idea to take care and have some tips related to our financial health, for which we have a renowned ophthalmologist, Dr. Manoj Agrawal sir, who is equally keen and a very good investor and having a very good knowledge related to how to manage our own investments. So I welcome Dr. Manoj Agrawal on
Thank
behalf
you.
of team. Welcome Dr. Sudhir Bhave sir. He is the president of IPS for West Zone this year. Without taking much time, Dr. Bhave sir does not require any introduction. He is a well-known personality in whole of the India and especially our Maharashtra and Vidarbha region, so he requires no introduction. I would like to hand over the mic to Bhave sir to please introduce the topic and have a start of the session, please.
Thanks a lot, Shreyas. So, a warm welcome to all of you. I would again thank Dr. Manish Thackeray for heading this very important, though often not given as much importance as it should be, subcommittee on Doctors Wellness Subcommittee. A few weeks back, we had arranged a program on physical wellness. And the idea was, I discussed this with Manish and Sudhir Mahajan, who is the secretary of this subcommittee, that, we need to talk about different kinds of wellness. Most professional bodies don't give emphasis on anything other than imparting knowledge in their respective specialties. But we thought of going beyond that, and we had this thing about physical wellness some time back, and today is the turn of financial wellness. I believe, I presume that most of us must be much interested in financial wellness, maybe much more than physical wellness or spiritual wellness, and for, I think, understandable reasons. People like me who are, very, very ignorant in the financial sphere. We expect to gain much out of this important lecture. And I really express my heartfelt thanks for Dr. Manoj Kumar Agarwal, who I had gathered is a very good speaker on the field. He has studied and is practicing. What he advises his audience from time to time. So I think we have a wonderful speaker today, and I hope that more and more people join to take advantage of the today's program. So welcome, Dr. Manoj Agarwal, and over to Shreyas.
Yeah. Before starting the session, I would just like to request everyone to please keep their question and answer ready. They can put out in a chat box. Either I'll jot it down and ask on behalf of the questions asked by someone, or they can ask the questions at the end of the session. So without wasting much of your time, I would like to introduce Dr. Manoj Agrawal, who is a well-known ophthalmologist in Nagpur, Mumbai.
Yes. Can we, in his Dr. Manish Thackeray wants to say anything, any few words to him?
Yes,
No, sir. We can continue with the session. We are already running. We are already starting late.
Okay.
We can continue. Yes,
Sure.
sir.
Thank you.
We would like to hear from Dr. Agrawal, sir.
Yeah, over to Dr. Agrawal, sir, without wasting much of the time. Please, sir.
Okay, thank you. And thank you to all the office bearers of the Psychiatric Western Region Society for inviting me. I'm an ophthalmologist from Mumbai. So it's thanks to you all for calling me. I'll start my share screen. Is my screen being shared now?
Yes.
Yeah.
Okay,
yes,
fine. Okay, as request to anybody, since Dr. Shreyas said that, I'll be talking on basic fundamentals, which I think everybody should know about savings and investment, what you should do, what you should not do about before we actually go into investments. What are they? Something like a pre-op stage, something like that. And then we'll go to mutual funds. Okay. But you can ask me questions on other topics also if you feel like, and maybe you can type in the chat box, and which we can take it from time to time throughout the session. I just want to know feedback. Am I audible enough, and are my slides clear enough?
Yeah,
Yes.
yeah.
Okay, fine.
sir.
So shall we continue? Yeah, that's myself. Okay, I'm an ophthalmologist and yeah, okay. Since I'm an ophthalmologist like you, I'm not a financial consultant. I've got no financial qualification. So it's just my experience, which I'm going to share with you all as a colleague of yours. Okay. An appeal to everybody. I always like to share this that I would prefer that if you can use Indian products, even your entry medicines as far as possible, don't use foreign stuff if possible. Okay, now today we'll be covering basics of investing finance and a little bit of mutual funds. Other things we'll not be doing. Okay, I did request that if possible, in this session, if the family or spouse or even the adult children are there, it would help them to benefit from this. Okay, now let's come to the serious stuff now. Okay, now if you see the last 43, 44, 45 years, then the share market in general has given you about 16% return per year. Nothing beats that. Okay, we are taking 43 years average returns throughout those years. And these are the average returns from the market. Now, if you've done some little sensible investments in mutual funds,
हाँ,
you
तू
get at least,
मैच
sorry.
start हो गया.
Yeah. Okay. And if you've got some sensible investment in mutual funds, as the last sentence shows, you get at least 5% more. So you can imagine and this is no magic about it, 20% return per year. Okay, why should we have these talks for doctors? We are a very poor financial literate society. In fact, there was a book by Why Doctors Don't Get Rich, which was one of the best sellers. Okay, now to get knowledge, you can have the NSC, BSc, and a lot of independent bodies do conduct study courses and online courses and certificate courses which one can attend and understand. Now look at this slide. Now this is a data of the last 32 years. Okay, I'm just comparing equity means share market with the other returns. Okay, since gold is talked about a lot, if you see the data, then equity has given about 16.5%, 17%. The gold has given 10%. This is over the last 32 years. Okay, so if you are invested in gold, which people think should be done, then you would have lost a substantial amount of money. I'll be talking to you a little more about this later on. This is just the introduction part. Okay, what should you do? As a basic, simple fundamental, you should invest or save as much as possible and give it more time. Okay, and if you can do both, fantastic, because compounding will come into play when you have long-term investments. Okay, now let's take certain things. Okay, the basic problem in investments is that it's our psychology. You are all psychiatrists. Is the psychology of ours, our human behavior, which is the biggest hindrance for our financial growth. Okay, personal finance is a very simple topic. It doesn't need very hi-fi complicated stuff to know. And whatever knowledge you need to know, we've been taught to is about the 5th standard. Okay, and if you're not invested so far, start doing it today. Forget the past. When you realize, jab jago tab savera, start doing it today and start saving and investing every month. Okay, now a few things. Always have your bank accounts, demat accounts, your property, your investments, etc., everything as far as possible in joint names with your spouse. Okay, and the mode of operation should be either or survivor. So anybody of you can use it, so that in case one is not there, the other person can continue managing it flawlessly. Single name, if you have, then the problem comes on the will line, who's the inheritance, etc., etc. The transmission. So as far as possible, have joint names, mode of operation, either or survivor. And my sincere request is, don't have your children as the holders in view. Make them the nominee, put them in the will. But in the holding, as far as possible, don't know it. Don't do it because you don't know what will happen tomorrow. Okay. For example, if it's husband A and wife B, then you can have 2 bank accounts. One husband A first name, wife B second name, and second account wife B as the first name and husband A as the second name. So so individual account used for their personal account for expenses, but for income tax purposes it becomes easier and operation becomes either. That's very good. Okay, keep your PAN, mobile, etc., Aadhaar, etc. updated. And in WhatsApp, if you don't it, please activate the 2-factor authorization. Go to settings and do it. It's very important because there's a lot of hacking happening in WhatsApp. Okay. Use separate accounts. Take health and life insurance if needed. I have hardly of these two. Make a will and keep about 4-6 months expenses for emergency use in a savings account or in a liquid account or whatever. Okay. Now there are n number. If you see this sentence here, there are so many types of different investment options. Okay, but simple tip is choose what you understand in a simple way, and don't fall for the trap of astronomical returns, which is not possible. Okay, don't fall for things which you don't understand. Okay, and compounding is what we'll talk later on. It's magic. Okay, now see, suppose now how do we buy things? Like suppose you want to buy a pair of shoe, you have an idea you'll be using the shoe for sports or for casual use or for formal wear. You want, your size, your color, etc., brand, etc. But when it comes to finance or investments, it is your money which is goes, and something is done to it, and your money comes back. So what the input and output is both money, which we are not mentally or psychologically prepared for. So remember this, and you give your money to somebody else, and his income comes from your money, which means if he gets less, you get more, and if he gets more, you get less. So never forget this. Okay, so always be suspicious when somebody gives you advice that, why is he giving me advice? Usko kya fayda hone wala hai? So always have a default suspicion in your mind. Never forget this. Okay. And there is no investment which is that ki emergency aaj karo, kal chala jayega, nothing like that. So don't fall into the trap. Okay. This I told you. Okay, now what I've done recently is for personal experience. As far as possible, today each person should have 2 bank accounts. Okay, so I have done that. So I've got two bank accounts on my name with my wife, and second 2 accounts in my wife's name. So one is for my expenses for my major transactions, and one for the UPI transaction. You have small expenses. They unnecessarily burden your main account. The statements become so cumbersome that it's very difficult to keep track of it. So what I do is I transfer an X amount per month into my small amount and for UPI. So I have an idea of what is happening and how much I'm spending. And that account I know is for the sundry expenses, doesn't trouble my main account. So that's a good suggestion. I think you can implement if you want to. Okay. And another thing is, which I was reading recently, is that always involve, even if the children are minors, you can at least make them aware of little financial matters, etc. So they know a little bit of finance, maths, money, savings account, etc. Bank, taking to the bank, often they understand what is happening. So let them be aware of finance things. Savings is just putting money separately. Investment means making it grow fundamentally, exponentially is investments. And today, from your income, you should save and invest, and the remaining you should expense. So first do the savings and investments, and then take care of the expenses. Okay, now inflation is something which is going to destroy your money over the period of time. We know that, and we've heard that 10 years ago we could buy something for 100 rupees. Today, you need to spend 1,000 rupees for that. So that's inflation. Need is something which is essential: food, clothing, shelter, etc. Want is something which is a luxury. You want a iPhone or a Mercedes car, etc. Okay, so you should decide which is important for you. Okay, don't procrastinate. Start doing it today. Don't delay things. Okay, and remember one thing: there are about 20, 30, 40 financial news channels, YouTube channels, TV channels, etc. All influencers, all are fools. They know nothing what is going to happen. Their knowledge is as good as yours or mine. So don't trust them. There have been data studies done showing that 90% of times their predictions are wrong. Okay, 90% of times. Okay. In simple way, see, when you invest, you have some goal in mind that you would want the money in 1 year, 2 years, 5 years, 10 years, child's education, marriage, you want to buy a home, you want to go for a holiday, you want to open your hospital, etc., or retirement. So in general, when the duration is short, you cannot play with the money. The money cannot be subject to volatility. So you want to put in some options which are going to be more steady. But remember one thing: more risk, more gain; less risk, less gain. So for the short-term investments, we say that in the first row that you should probably put in debt or FD so that your money is safe. You may get less returns, but the money will not go reduce in value. And as the duration increases, you can go a little more volatile, and more than 7 years, put in equity. That's maximum returns, but maximum volatility means your investment goes up and down in value. Some people may not like it and they may get a heart attack. So that's what it is. Okay. This is another important slide, a simple slide. So less than 1 year or less than 3 years, you can go for debt funds. 3 to 5, 7 years, maybe a combination of debt and equity. And more than 7 years, you can go for equity. And still more than 10 years, you can go for more like the small cap or mid cap funds, which give you phenomenal returns, but more volatility. Okay, this is a fantastic book by Morgan Housel. I've read the book. It's available online. It's on some free also. Read it. It's a very, very readable. You can start reading in a few hours. You finish the book. It's fantastic, basic knowledge about investments. And it's a very nice book. Okay, now this shows that how different investments behave. Now, if you see data is for almost 10, 11 years, and you can see different, international, Indian equity, etc., real estate, gold, equity behave. What is good this year could be poor next year. So this is going to happen. So don't worry about that. Same thing in different indices. You've got different sectors which behave differently. Okay, or even different types of equity investments. I've just done a ray diagram, and you can see how it behaves. Yo-yo effect, roller coaster effect. Don't worry about it. Keep all your investments simple. Okay, don't make it complicated. What you don't understand, don't do it. As simple as that. Okay, now look at this data. This is Indian data for almost almost about 44 years. Okay, 1980 to 24, and you see equity has given you phenomenal. Gold is a poor second, rest are still worse. Okay, the equity is beaten everything easily, so you should go for equity for long term. This is US data for over 200 years. Same result. This is another data, Indian data for almost 33 years from 79 to 2021. And look at the highlighted red box. The Sensex has beaten everything easily. Okay, online there's a site called calculator.net, which gives you can use. It is got all financial calculations, etc. And if you want to calculate how much money you would need, how much returns are you getting, etc. It's a very simple site which you can use free. Okay, now there are different types of investments available. I've just listed some of them, and all are not suitable for everybody. So you need to decide what is going to be good for you. Okay, now look at this. Okay, don't worry about the numbers. Just pay attention to what I'm saying. If you invest 25% of your yearly income for 20 years, just I'll repeat. Forget the text. Forget the numbers there. So if you invest 25% of your income per year for 20 years. Okay, and I'm taking a return of 14% per year, though I'm expecting you to get at least 16, 17, 18%. I'm taking a conservative 14%, then 20, just pay attention now. So 20 years later, the returns from the investment would be more than your current income at that point of time. I'll repeat. So if you save only 25% in yearly income per year for 20 years, okay, then 20 years later, the returns, not the principal amount, the returns from your investment would be more than your income at that point of time. Very simple, very easy. No magic, no black magic in this. Okay. Yeah. Another simple is look at the highlighted red box. Okay. So if you want 2 crores rupees after 20 years, just invest 16,000 per month. And I'm sure everybody in the audience can easily invest that much. So you put in 16,000 per month. After 20 years, you will easily get 20 crore rupees. It's not difficult at all. Okay. And look at these mutual funds. Now, these are the last 11, 12 years data. These are the worst performing mutual funds, the lowest bottom 10 mutual funds. And the bottom one has even given you 12.5% per return year. Okay. So you can see this. So even if you are a bad luck investor and you get the worst fund, you will still you will probably beat every other investment even then. All right. Now the stock market has crashed. There have been crises and scams, etc. Doesn't make a difference. We are Indians. Indians' future is very bright. So trust India, invest in India, you'll do well. Okay. And equity beats everything. And if you see this data, this is comparing equity mutual funds with property, with PPF, with gold, bank, bonds, saving account, cash, everything. Equity beats everything. Okay. Keep your things simple. Okay. Don't make your investments complicated. Okay. Warren Buffett, I hope you heard of him. He's a simple man. He's one of the richest man in the world. Supposed to be the stock market wizard. He's staying in the same house he bought about 60 years back, 65 years back. Simple man. Same thing with Mark Zuckerberg. He wears the same gray t-shirt every day. Nothing else. Okay. With your birthday, what do? Don't blow up another party. Invest it. Few years later, you can have a party every day. Okay. Don't trust anybody. Okay, there you go to the mutual, you go to your bank, you go to your jeweler, everybody, they want to try to sell something or the other. Don't fall for the traps. Returns, risk. I assume people know what are shares and what are bonds. Shares is you buy a share in the company, you're owner of the company, and they're listed on the stock exchange. Shares, stock exchange are the Bombay Stock Exchange, National Stock Exchange. Debts bonds are like your bank FD. You give money and you get a fixed interest per year. That's debts and bonds. I'll skip this. Yeah, okay. Now inflation is going to everybody know what inflation is, but I wanted to highlight here. What is inflation is that your money losing value over time. Okay, so what is worth 100 rupees today, maybe next year you'll be paying 10 rupees for the same. This is inflation. So whatever return you get, so when you invest your money, you should grow at a rate which higher than inflation. Only then it is called as real rate of return. If your investment does not beat inflation, that means your money is losing value over time. Pretty soon you will become pauper. You will be living in poverty. So your returns should beat inflation. India, in the last 10 years, inflation has been average about 5.5%. Okay, fine. So that's inflation. Next is compound interest. We taught in school. Interest on interest, compounding your yearly is called as compound interest. Okay, simple interest is that's interest doesn't give you interest on interest. So compound interest is the magic which is going to give you phenomenal returns. Look at this slide here. Okay, so this extra, the purple box is the compound interest which is icing on the cake. Simple. Another formula is if you invest 15,000 rupees per month for 15 years, at a rate of 15%, you'll have 1 crore rupees after 15 years, which I told you something before. This is because of compound interest. Okay. Albert Einstein said that compound interest is eighth wonder of the world. He who understands earns it and who does not pays for it. He lost money in the stock market, and then after that he realized that he should not be doing stock market. He's a scientist, not an investor. Okay. Some of the rules of finance are simple thing is the first one, rule of 72. This is what we use how to calculate it mentally. So it says that the rate of interest, okay, so 72 divided by rate of interest tells you the amount of years your money will double. For example, if you invest somewhere and you get 8% return, so 72 divided by 8 becomes 9. So your money would become 200 in 9 years. So if you have invested 100 rupees in a bank FD, which is giving you 7%, okay, so 70 by 10, 7 is about 10 years. So your 100 rupees will become 200 rupees in 10 years. Very poor returns. Okay. So same thing for the other ones. Others are not important. Okay. Now what is asset allocation and rebalancing? Asset allocation means that we've got money in, say, mutual funds, equity share market, property, gold. Some people may have crypto. Some people may have paintings or antiques or stamps or coins or whatever. So everything together are called your assets. Okay. Now with time, some of their value will increase, some of them value will go down. So your ratios among them will change. So if you want to readjust the ratio, it is called as rebalancing. So asset allocation is knowing where your assets are percentage wise. And if you want to get the ratio back again, it is called as rebalancing. So lot of people suggest that to maintain the ratios, you should periodically do rebalancing. It's not very easy to do, and then it involves taxation also. Okay. Now, should you ever take a loan? Okay. I believe that as far as possible, don't take a loan except in 3 situations. This is what I've learned, what I've understood, and this is what I say. Okay. So first is in an emergency. Okay. Like COVID came, people had emergencies or whatever reason you got an emergency at home, then there is no questions about it. An emergency, take it. Second, maybe for an home loan. Okay. Because generally, but home loan should be only for the first home in which you will stay. All other property loans are useless. Don't take it. And if you have it, surrender it. Okay. So it's only for the home in which you will stay. And then you should take it. And third, maybe something for your betterment. For example, you want to do a fellowship where you need to pay so you to become a better doctor. Or you don't have a car, you want a car because a car is necessary for a doctor. So something which will make your life or your profession better for yourself. So the 3 situations I think you can take. Otherwise, I shouldn't take. Okay. Should you take an advisor to advise you on finances? Maybe if you can't do it yourself. But see, I always say that we are doctors. We are the most intelligent people in our country. So if you spend maybe 10-15 minutes every day, in a few weeks or months, you'll be an expert. Okay. So, but if you can't do it, then you hire somebody or involve somebody and they will charge you. Some of them will charge you a bomb for it, but that's your choice. Okay. What is marketing? So India has got about 5,000 companies listed. Okay. So so all these companies have their values. Okay. So if you arrange them in a descending order, so the total value of those companies is called as the market capitalization or market cap of each company. Okay, so if you arrange them in descending order, then today in India, Reliance is number one. Okay, so the top 100 are called as the large cap companies, the next 150 are called as the mid cap companies, and the last 251 onwards till 5,000 all are called as small cap companies. These companies are listed on two stock exchanges in India, BSE, that's the Bombay Stock Exchange, whose barometer is the Sensex, and the second is the National Stock Exchange, which is the NSE. Their barometer is the Nifty. All right. HUF is something which Hindus can have as another tax-saving device. And I'm sure you've heard of capital gains and losses. Okay, certain assets are classified as capital gains. So if you sell them, then you will either sell them in a profit called as gains or as losses. Okay, and depending on that, one second. Yeah, and depending on that, you would have a taxation involved. Okay, so that is a different thing. Shreyas, can we continue? Or any people have questions to ask on this before we go to mutual funds?
As of now, there are no questions typed in the chat box.
So we'll continue mutual funds and maybe later on people can unmute and they can ask them.
Yes, sir. I think we
Later
should
on then.
continue.
Should I continue?
Yes, yes. Sure, sir.
Okay, so if we go to the mutual funds now, okay, now mutual funds are a very simple option. Okay, look at the benefits. We give the money to the professionals, so they are the experts on this market. It is very cheap. It's transparent. There is no hidden cost, or there is nothing where they're investing. If the full portfolio is disclosed to us, it is very convenient, easy to do online. You do 2 clicks, you can do it. You can invest even 200 rupees, or some are even allowing you to invest 10 rupees at a time. There's diversification which reduces the risk. It is very liquid. You want the money, you click on your internet, and within 2 days the money will come in your bank account. And they're very well regulated by SEBI. SEBI is totally investor friendly, and they cannot, the companies cannot do frauds with it. Okay, they are transparent. A lot of advantages are there. Okay, and mutual funds are available for every need of yours. Okay, for short-term goal, long-term goal, for you want whatever you are planning to buy something. You got equity funds, mixed funds, gold funds, debt funds. You can invest in India, you can invest in abroad, you can invest in a profit, especially in like energy or mining or gold, etc. Lot of options available. Everything is available in mutual funds. Okay, now how do mutual funds work? Okay, there is a company called as AMC. They are the company. They stands for Asset Management Company. So they are the owners of the mutual fund. There are about 45 AMCs in India today, and they will float mutual. The word mutual means sharing. Okay, mutual benefit. So they advertise that we are launching this fund, and people give them the money. So if you trust that mutual fund company AMC, you will give your money to them, and they are the expert, they're professional, they have a research team, the back office, so they will pool that money, and depending on what they have promised, they have to invest in those options only. They cannot take money for X purpose and then invest in Y. That is not allowed. Okay, and they'll invest in better expertise, and your money which you invested will gradually keep on growing. Okay, and as it keeps on growing, the value of investment grows, and whenever you want it, you can take it out. And if you don't want it, the money stays there for years and years, and it will continue to keep on growing. Okay, this is how a mutual fund works. So they pool money from multiple people. Advantage is basically there is no, when you put money, there is no entry load. The full money is invested. Exit load means when you withdraw the money, do you pay some penalty on it? It depends on the duration. If you do it yourself, there is no brokerage. If you go through an agent, then you pay a brokerage of about 1%, which I think is very, very high. So as far as possible, do it on your own. Don't go to a broker. Okay, there are significant tax advantages. They are safe, they're transparent. You can invest in them with HUF also. You get ready-made diversification, which is very good. And mutual funds are, they're very simple to do. Okay, that's a big plus point. And you've given their money to a professional team. So they are the expert. They will do it. They'll do a very good job. And you can do what you want with it. Very options available, and they're very well regularized. So they cannot fool or do any frauds. Okay, you can invest even 250, 500 rupees at a time. Even some people are even 10 rupees also. They're highly liquid. You click, 2 days, the money comes to your account. Suppose you got invested of 10 lakhs. You want 10,000 rupees, you can withdraw 10,000 rupees. Your choice. Okay. And anybody can do it. You can put money in international market. Like one of the schemes I have, they've got Alphabet, which is Google shares, Microsoft shares, and Samsung shares with them. You can nominate whomever you want. You can take loan against mutual fund. You can pledge mutual funds. You can do systematic investments, and there's a lot of other benefits. Okay, people ask me which is the best mutual fund. There is no such thing as a best mutual fund. It depends on your need, your demand, your horizon. Okay, what is good today may be poor tomorrow. So there's nothing like that. Okay, these are the list of some of the common the AMCs today, about 45. This is some last year's data. There are about 45 asset management companies in India today. Okay, and okay, now something called as NAV. NAV stands for net asset value. Some of the brokers will try to make a fool out of you on NAV. So NAV just tells you the value of one unit, nothing else. Okay, so ignore it otherwise. Don't fall into the trap of किसको NAV सस्ता है तो सस्ता मिलेगा वो खरीद लो आप. They're looking after the commissions. Don't fall it. Okay, now how do you choose a mutual fund? In India, there are about 1,800 types of individual mutual funds, or maybe more. How do you decide which is good? And you should not have more than 4 or 5 or 6 mutual funds. So how do you decide how to go about? So I'll tell you some tips about that. So one is read. Okay, be knowledgeable yourself. So these are some of the sets I've listed. This is the first one which I normally use. I do it every day. It's free. Lot of data about it. Very fantastic. Or there's other sites you can go to. You can read some magazines, online, physical, etc., which will give you more knowledge. Okay, and you can visit some sites for transacting. So how do you buy and sell mutual funds? You can, the first two is which I use. There are many sites like that. You can use your pick or whichever you feel like, and you can transact for them. If you can't do online, you can physically fill a form, courier it, go to their offices. In major cities, most of the companies have their offices. You can go there and do it. If you can't do it, you can courier to them. Okay, so all things are possible. Or if you can't do any of those, involve an agent. Will charge you on an average 1% goes to him from your money, which is too high for IC. Okay, should you buy a new fund? No. Should you buy sector thematic funds? No. Okay, should you invest in IPOs? No. Okay, now let's take the types of funds. Okay, now the first is the equity funds. Okay, equity, you have the equity fund, debt fund, hybrid, and commodities. What are they? Equity means your money goes in, you will give the money to the company AMC, and they will invest on your behalf into the share market. All right. Now in equity, we'll talk about the subdivisions later on. So it goes to the share market, and equity historically over 200 years has given the maximum returns across all investment options, maybe except smuggling and gambling probably, but even those may not be that much good. Okay, debt is something like a fixed income, which is a poor returns, but the money is little safer. Hybrid is a combination of the two. Depending on, you can have different ratios. You can have more equity, less. We'll talk a little later on. So hybrid is a combination of equity and debt. And then commodities can be gold or silver. Okay. Then you can have a direct and a regular plan. Direct means you do it yourself. You save on an average 1% per year. That is very important. The regular means an agent is involved. Then more, as I told before, mode of fielding, as far as possible, involve you and your spouse. But the mode of operation, make it either or survivor basis, so that either of you can use it. The transmission becomes very easy. Statement, take an email statement. Duration is all open-ended means perpetual, forever. So once you put in the money, till you don't withdraw the money, money stays there for years and decades. It continues to keep on growing. Okay. Then expenses, not very important, except the agent. Type of return, always go for growth options and others. And the last one is important, SIP, STP, and SWP. Okay, I told you about all these. Okay, now look at this. It's a mind-boggling slide. This tells you the different tree of the different types of mutual funds. So in equity funds, we've got so many types, and the numbers tells you the subcategory, that each subcategory is how many funds. So this is a mind-boggling number of mutual funds we have. Now let's take the equity funds. Okay, now equity, there are about 8 or 9 types of equity funds. Okay, and this is how they're defined. So if you take a large cap, then this has been defined. So the money has to go in this way. So they cannot do anything else. So these are equity funds. Okay, and okay, active passive is, active means the fund manager to buy and sell. Passive is an index fund, which means the money will be put in a certain ratio depending on the index, and it will copy the index. That's passive. In active, the fund manager will be, depending on his expertise and knowledge, he will keep on buying and selling. All right. These are the debt funds. These are the hybrid funds, different categories altogether. Okay. Now look at this. Okay. Now, if you invest in mutual funds, as I told you before, no pain, no gain, or more pain, more gain. So this tells you as the risk increases, the returns increase. Okay. So here in the liquid funds, your returns will be less, but your money will be a little more safe. So for short-term duration, you should go for this, but longer duration, go for equity funds. All right. Okay, risk level I've told you. So the equity funds is more risky, and the equity funds, small, I told you before, the small and mid cap little more risk. Sectoral thematic is also risky. Large cap, less risky. When by risky, what I mean is, what are your chances of your investment losing money? Okay, but in long term, you get good returns. So in long term, the risk of the volatility evens out. Okay. Today, SEBI has mandated that every mutual fund scheme will have a simple riskometer chart, and there is an arrow or a pointer which tells you how risky your fund is. So even a layperson can make out whether it's suitable for him or not. Direct, please do it yourself. You'll save a lot of money. Yeah. How to invest? As I told you before. Now a lot of people tell me कि हमारा scheme है, but we don't know what it is. So I tell them, okay, look at your statements. How do you know whether your investment is direct pen or not? Two things. Look at the two red boxes. So first is the scheme name will have the word direct in it. If not, then it'll have a regular name. That means there is an agent involved. And the second thing is that the chart will have a distributor code and name. So if it is direct, it will be all blank. Otherwise, the name and the agency code and commission and will be there. Okay, so remember this. This is how you don't get fooled. Okay, and I told you before, it should be either or survivor. Growth option is what you should choose. Okay, now this systematic investments are very important. So always do this. Now, I'm sure people are familiar with something called as a recurring deposit in a bank, which means you put in a fixed amount, let's say 500 rupees or whatever in your account every month in the bank or the post office. So this is something SIP stands for systematic investment plan. So in this and fixed amount which you decide from your bank account, it will go to a X scheme which you decide on which day of the month for how many years. Okay, so automatically on that day, that much money will go into your bank account. So it is very convenient. It makes it automatic. You don't have to worry about, the heart and the mind. The market has gone up and down, and it enforces discipline and compulsory. Your money goes as an investment. Otherwise, you would blow up the money. STP is systematic transfer plan, which means you shift money from one scheme to the other. Okay, and SWP is reverse of SIP. So if you want, let's say you are retired and you want a monthly expense. So you start an SWP. So you can say that I want 50,000 rupees a month every month from my mutual fund. You do some clicks, put in the data, and automatically on that day, 50,000 will come into your bank account till you want it. Okay, so that's SWP. All three are very important, very useful, and we should go for it. Okay, this I've told you. Okay, now how do you invest? Okay, I told you. So one, you need to be, your Aadhaar, PAN, mobile should be linked. Your bank account should be online if almost all of us have it. And so easiest is to do it online. I told you the sites before. Or if you can't do it, you can download the form from the net, fill it up, go to their site, go to their physical branches, or query to them, or involve an agent. Okay. Now, how do you hold your account? So either you can have a statement of account, which means it is between you and the mutual fund company. Some people, or you can buy your mutual funds through your Demat account. Okay. So then then your mutual funds are held in your Demat account. My mutual funds are not in my Demat account. I have kept them outside my Demat account. So it is something called as a SOA, statement of account. I have done that. But your choice, you can do whatever you feel like. Okay, how do you retain mutual statement? Okay, so it's like a bank passbook. It's got your name, address, your mobile number, your bank account, the name of the scheme. It's whatever it is, how much money is there, how much is the current value, the NAV, and the current value, how much you put in, etc. All the details are there. It's like a bank passbook, details are there. Okay, now people tell me, we don't know how much you've got. Now, these are some of the technical data where you get. Okay, now simple logic I'll tell you is ignore the hype, ignore everything else. Look at the last one. Okay, that's what most of these schemes will tell you. CAGR, that is called as compound annual growth rate. Okay, so if you get that if you see a table which will come later on, and it shows that you got 16% for 5 years, which means you got 16% per year averaged out over 5 years. Okay, so CAGR is what is we compare funds with. Okay, now this is some data as of about 2 or 3 months ago. Okay, now if you see, okay, different data, these are all direct plan returns. The last 10 years return is what the mutual funds gave. Okay, so small cap 17-18%, etc., etc. And this was because this index had fallen about 8 or 10%. Today it's gone up. So this keeps on happening. This is just the data to give you, and these are good returns. Okay, now this is a little old data, September 21. At the lower half, you can see the gold, and you can see this is September 21 data, and you see compare the equity funds and the gold. Okay, the gold is giving you poor returns. Okay, for technical stuff, I'm skipping all this. There are about 19 mutual fund technical ratios or data. Okay, look at the black box on my side. I've got, what do you do? Ignore them. Okay, so if somebody tries to impress you, okay, my fund has got a sharp ratio of this, giving me alpha, this, beta, that, Sortino ratio, tell him get lost, doesn't make a difference. Why doesn't make a difference? Because all the mutual fund sites, like I told you, Value Research Online has done all the homework for us and gives you in the star rating 1, 2, 3, 4, 5 stars. So choose from that. All the homework has been done, so ignore it. You've been spoon fed. Why should you bother about this? All right. Switch redemption means you shift money from one scheme to the other. Redemption means the money comes into your bank account. You withdraw the money. Okay. You can take loan. You can pledge them. You can take loan against them. Okay. Now, how do you invest or where do you invest? Okay. So as I told you before, so if your money is for long term, then you can take high risk, go for equity funds. Very high, very long term, you can go for mid and small cap. That is more risk for fantastic returns. If it is 7-8 years, you can go for maybe large cap equity funds. It is 3-4-5 years, hybrid funds, partly equity, partly debt. Less than 3 years, debt funds. That's something like that. And then in which one? Go to the mutual fund site, choose a good rating fund and take it. Okay. This I told you before. Okay. Now, how many funds? Keep things simple. The more you have, it is not more. Here, it is not more the merrier. The more you have, the more troublesome it is. So you should not have more than 4 or 5 funds or maybe 6 funds. That's it. Nothing more than that. Okay. So how do you decide? Okay. This is a 1 minute. So this is a simple chart you can look. Okay. So how do you decide how many funds to choose? So if you are aiming for long term, you can go for maybe up to 2 flexi cap funds. Okay. For the amount of money which you want for medium term, maybe you can have aggressive hybrid funds. Okay. If you're doing old tax regime, 80C benefit, then you can take 1 tax saving fund. Okay. Something like that. Sorry, and you can have your funds, but not more than 4 or 5. I've got about 6 funds. The funds will keep on changing. What is good fund this year may become average next year and maybe poor the year later. Okay. Now this is it's about 2 months old data, last month data. This is online from Value Research, and this is just some of the funds which are there. Now, if you feel that the large cap fund is suitable to you, then if you look this is listed of the 5 and 4-star funds. So you can choose anyone which you want and you can invest. Okay, and the table on the right shows you. Just 1 second. Table on the right shows you the returns over 1, 5 or 7 years. Okay. So this is, see, all you need not mug up this. You can go to this Value Research on any site and they will tell you, tell me 3 good large cap funds, for example, you will get the names. Okay. So there is no need to mug them up. It's very easy. Okay. These are the mid cap, small cap and tax saving funds. Okay. Okay. And then we have these are the hybrid funds, the aggressive and conservative, etc. And then the debt funds. Okay. Now, this is the photograph of the CEOs of the 45 AMCs. Now, this is a study I did. Okay, that there was a magazine and they had interviewed all of them and they were asked a pointed question: where is your money invested? So all these 45 honchos told what they've invested in. Okay, and I have analyzed them and give you data. So if you look at this, so 80% of them had invested in equity mutual funds, not buying shares directly in a demat account. They themselves, they are the honchos, and today the mutual fund industry is worth about 68 lakh crore rupees. I'll repeat, the Indian mutual fund industry totally manages about 68 lakh crore rupees. And these 45 people are managing that. And they are putting their money 60% in mutual funds. Okay, that is very little, and they have only one house in which they live. Gold is less than 5%. Okay. Okay, now this is, I'm going to list you my schemes. This is where I've got my money. Where I've got one flexi cap fund, which is the Parag Parikh Flexicap. Okay, in that about 10% of that fund money is in the US international market. I've got one multi-cap fund. I've got one large and mid-cap fund. I've got one mid-cap, and I've got 3 small caps. Okay, small cap, one of them is very narrow-minded. So I've got 7 funds across six AMCs, and it's diversified. I've got no index fund. I've got no thematic fund. Sorry, I've got one small cap fund. I've got no thematic fund, no sectoral fund, and no pure large cap fund. Okay, now this is the returns which I've got. My funds have given me this data from October 24. So if you see, this is what the market gave, and this is what I got. Okay, so you can see how mutual funds can beat, invest sensibly the returns which you've got, and nothing difficult. All of you can get it. I have not done any magic, nothing, and I've told you my funds also. Okay, now when I invested this fund, they were top performing funds. Some of them today are below average now. This happens, so I'm not bothered about it. If out of the 7 funds I have, except 3 of them, 4 of them are below average today. Okay, that's okay. This happens, so I'm not bothered about it. Okay, this is what returns I got. Okay, and as I told you before, you can buy, through mutual funds, you can buy international companies very easy. Should you nominate? Yes, it is mandatory to nominate today. You should nominate. Taxation, I don't think you should worry about it, because mutual funds in general have got a very favorable taxation. Okay, you pay tax when you withdraw the money. So if you put money, I said 1,000 rupees, if you for 100 years, you pay 0 tax. You'll pay tax when you withdraw the money. So till you withdraw, no tax. There's a big advantage of mutual funds. So rest I will skip out. This is the taxation details. I think this is too complicated. Tax harvesting. Can you gift or transfer? You cannot. Okay. Transmission means, yeah, on death, that is allowed. It goes to the nominee or the heir, depending, or the will, depending on the situation. That is done. You pay tax on inheritance? No. This is the site of valuationonline.com, and it shows this is the homepage, how it looks like. Okay, a lot of data. It is free. You need to just register. You have to just sign in once. It is free, and then you can access everyday articles, a lot of things. Okay, different data they have. Okay, MFU is the site which I normally use for transaction. Okay, you can go online, open an account, and then you can transact through it if you want to do it. Okay, another thing is MF Central. Both can be used. I use MFU. You can use either of the two, whichever you want. These are 2 most popular sites for transacting. It is free. You pay nothing to them. These 2 sites have been set up by the AMCs themselves. So it's a public service initiative by these mutual fund companies. Okay. Now there's something called as Mitra, launched about 4 or 5 months back. So if you got some investment in the past in mutual funds and you forgot about it, either you forgot about it or you did not know whether you have, so you go to this mutual fund MF Central, and Mitra is what they've launched. You just type your PAN number, and if you had some investment in the past, all that will be reflected, and you can redeem it if you want. And I know some of my people I have advised, they were thrilled when I told them what to do, because they had forgotten about it altogether. They did not know they got some money somewhere, and like magic, like a bonus, and money came back to them. Okay, so you can use this. Okay, even DigiLocker they're going to allow in DigiLockers to have this. I think this we can skip. Yeah, that's it.
Sir, I think you should go to that slide where it shows the mistakes to be avoided.
Okay, fine.
Once.
So these ones, right?
Mistake pro, yeah.
Yeah. Okay, fine. Okay, fine. So first is, as I told in the beginning, that is, it's our psychology which is the most problem. Okay, see, once you invest, do your studies, invest, and don't worry about the market noise, the hype, the TV channel, your neighbor, your friend, anybody, they will tell you, कि I put money in this, मेरा इतना हो गया है. Then you wonder, यार मेरा तो कुछ भी नहीं हुआ है. Don't worry about it. Trust where you invested. Be invested. Your market will grow. Don't worry about it. Okay. Don't stop your investment. Don't stop ships. Don't hold too many funds. As I told you, the more funds you have, the more confusion you will have. Don't panic. The market crashed. COVID time, the market crashed 40%. I was very happy. People cried, but I was very happy. Okay. The last 8 months, 10 months, the returns have been practically almost stagnant on 5%. This will happen. Don't worry about it. Okay. So buy whenever you have the money. Don't time the market. Market through 100 point गिर गया, will buy. Don't do that. Don't trade. Don't be a day investor. Don't trade. Don't do futures and options. Don't do derivatives. Okay. Don't invest where you don't understand. Okay. And don't start investing today. Okay. Anybody can invest, even your mate. Like fortunately, my two of my clinic staffs, from the hospitals where I go, about 20, 30 different hospitals I go to, the receptionist, the ward sisters, the OT staff, the ward boys, about 30, 40 people are investing on my advice in the last 7 or 10 years, and they're so happy because they can see their money growing. Okay. So anybody can do it. Some of them investing only 1,000 rupees a month. For them, 1,000 rupees are too much. So you can do that. My homemaid has started investing. The maid which comes to my house, she's investing 2,000 rupees a month. Okay. So you can help them out and do it. Anybody can do it. Okay. And okay. So just keep on investing. I told you, ignore NAV. Okay. Don't fall for the traps. Anybody tells you कि आज last day है, कल बढ़ जाएगा, ignore it. Anybody comes to sell you a thing, think why is it telling you, उसका फायदा क्या है? Study, ask questions, go to online, and then think. If you're doubtful, call me or ask anybody else. Okay. Mutual funds for doctors is the ideal thing because we have no financial knowledge. If you do shares directly, you need to spend time to actually understand, which is not meant for us. Okay. Mutual funds are not risky at all. Okay. You can do online. I do everything online, very safe, very easy to do. Okay. And you can take loan on, you can pledge to it. A lot of things can be done. Okay. It's very liquid. You can get money whenever you want. And okay. It's tax friendly. And there are different mutual funds for any type of need. So it can cater to every individual. They're fully transparent, no hocus pocus involved. And the other thing was, like, some of the funds will have, this is ABC retirement savings plan, ABC children benefit plan. Okay. All these are nonsense. Never fall for these traps. The word retirement and children is to fool you. Okay. So ignore them. Anything else? I have tried to be brief, but I've tried to cover up as much things as possible.
No, sir, you have covered most of the things especially about the investment psychology and mutual funds. So we have a lot of questions pouring in.
Yeah.
Let me start with
one
the
second.
first.
Okay. Yeah. So go ahead. You can
Yeah.
you can ask me the question or text.
Yeah. Then I'm just asking the question
Please.
directly. You said about combining the Demat accounts of the spouse together. So my question was how to combine it when we have two different Demat accounts and open maybe on two different platforms. So how do we do that?
Okay. Now the thing is that some platforms, let's say for example, you have 1 minute. Sorry, they've got Demat accounts in two different platforms. Correct?
If at all they have Demat accounts in two different platforms, like I have two Demat accounts and I have a combined Demat account. I have not combined, but my wife and me have a Demat account on Zerodha. But as you said, to combine the operations, how do we do it? So that's what my question was.
Okay, now in India today, unfortunately, some of you may be already having existing mutual funds. Unfortunately, in India, in mutual funds, we are not allowed to add a name. I don't know why. Okay, so if you've opened a mutual fund, you have in your single name, what you can do is let the money be there. The future money, you open a new account in mutual fund and open with joint name on mode of operation, either or survivor. Remember this. Okay. Fine. So mutual fund is one thing which you can't add. Okay. Now some banks will allow you to add a name. I know from personal experience, State Bank of India allows, HDFC, Canara Bank does not allow. Okay, I think so. But State Bank allows. So if you have an account in those bank account, if you can add a name, do it. If they don't allow, I would still suggest then close that account, open a new account in the same bank or somewhere else. It will be tricky to then shift all your bank details from other place. If you can do it, do it. Okay. That's the thing.
It's
Now,
that is about bank account. I am asking about two Demat accounts. Can we club that?
can be.
Can we club or can we operate it simultaneously?
No, what
Both
you can
accounts.
do is, see, you can do an off-matrix market. Suppose, let's say you've got a Demat account in a single name, correct?
Hmm.
Okay. So in Demat account, I don't think name addition is allowed. So what you can do
Okay.
is you open a Demat account in the same entity, okay?
Hmm.
Which say you first, your wife second, and
Hmm.
tell your Demat, your broker to
Hmm.
shift the full portfolio to this new account.
Hmm.
Since
Okay.
there is no financial involved, there is no taxation involved.
Okay.
Okay, so you
That's
can do
fine.
that. So you have one account in your name, first holder, one account in your wife name, second holder. That is what you can do. And if you're opening a new account, open in joint names.
There is one more question from Dr. Bhave.
Yeah.
Opinion on investing in cryptocurrency. Your opinion on investing in cryptos.
I don't do it. I tell simple thing is don't invest where you don't understand. I'll tell you, since cryptos is, lot of hype is, they'll tell you what cryptocurrency is. Then you will laugh at it. Okay. Now there was a Japanese person, Saketo Takashi,
Yeah.
something like that. People
I know.
don't even know was it an individual or was it a software program or what it is it. He made an algorithm. Okay. It's a software program where they said that there will be 20 million, I think 20 million cryptos would be there, Bitcoin. Okay.
Hmm.
And people got hooked onto it. And because it's a limited number, there can be more than that. People, started buying it auction. And there is no physical bracket to it. There is no gold. There is nothing, it is standing on thin air. There is no asset backing it.
Mhm.
Okay, so it's just the hype which is taking it up. One day this bubble will burst, and because Bitcoin became a hit, today there are, I think, not less than, I think there are 3,000 types of cryptos. Okay,
Yes.
don't do it. It is a bubble which will burst. It has got no fundamental backing. When you invest in mutual funds or debt or equity, there is a company, there is assets, they are doing some production, they are selling things, there is assets. Crypto
Yes.
is hawabazi. Okay, I don't do it, and I would suggest don't do it.
Opinions of I think very.
There is another question
And
by
on
Dr.
cryptos, okay, hold on. WazirX was the India's biggest platform. Last year, they had a fraud of 2,200 crore rupees. And what did they do? The fraud was on their platform, their site problem. They said Gaya. Who lost the money? The investor lost the money. The platform
Yeah.
WazirX said हमारा कुछ नहीं लेने देना है. 2,200 crore rupees of the investors' money in crypto or WazirX just evaporated. Okay.
अभी फिर से चालू हो गया सर WazirX.
हाँ, वो तो करेंगे ही ना वो तो. Because they said हमें हाथ उठा दिया. They said when the
मैंने
terms of conditions were there, this is possible. We don't get blamed. हम क्या कर सकते हैं?
मैंने शिबा के 5,000 खरीदे थे 200 रुपए के.
क्या बोल रहे हो?
शिबा करेंसी खरीदी थी मैंने
हाँ,
5,000 200 रुपए की.
see, except the top 5, 6, 10 names which are not Dogecoin and Bitcoin or whatever, the rest, are nothing. Even these are. So please don't do cryptos.
Sure. Then second question, like you have answered, I guess. What are the thematic or sector funds?
Yeah. Okay. I just tell you what, thematic and sector. These are equity funds, but they are in a very narrow base. So thematic will be sector means okay, financial sector. That means the money will be put only in the finance sector. So banks and the non-banking finance institutions, those kind of
Non-banking
things.
finance.
Yeah. So then your money is focused in a very small segment, not diversified. The risk is very high. Please, as far as possible, I would suggest
Like
don't do it.
automotive, chemicals, and any
Sorry?
particular sector, like automotive sector, chemical sector,
Yeah.
steel sector.
Yeah. So you got you got there'll be like financial,
Uh,
commodities, energy,
hmm.
so those kind of things, agriculture, mining, consumption. Naina, they're coming out with new strategies how to fool people. Yeah.
There is one more question from Dr. Manish Thakre. How to start or maintain a e-mandate for SIP? How to start a e-mandate? Like how to create a
Yes, very
e-mandate
easy,
for
very
SIP?
easy. Now let's say you already have an investment in a mutual fund. Let's say you have got, let's say, in XYZ mutual fund. Okay. Now you want to start an SIP. So if you're doing it online, go ahead. If not, suppose it's what you can do is go to the site XYZ. Suppose your investment is in, let's say, HDFC large cap fund, for example. Okay.
Hmm.
So you go to HDFC mutual fund site, go to investor. It is very easy. I'm just telling you what guidelines. Go to investor, type your PAN number, OTP will come, type, they'll tell you, ki, yeah, yes, you already have a folio with an account with us. And they'll, what do you want to do? So tell them you want to start, they'll give you an option. You want to start an SIP, click on it. Okay. And then they will ask you how much money, start date. Okay. And then they'll tell you bank account, stop date, which month, which year. Just click on flicking it, how much money, etc., etc. Do it. Takes 2 minutes and that's it, done.
Okay. They sometimes ask bank to this give permission for this e-mandate, something e-mandate from bank.
No. What happens is that when you start an SIP online, first you have to go to the mutual fund site. Once you do all this, the mutual fund site will give you a code. Okay. Now then you have to log in into your bank account. Okay. In every bank account, there'll be option of a mutual fund investor or SIP, something like that, depending on your bank platform, your bank, because there's software. So there you go and you type that code there.
Okay, yeah.
Okay.
That
So
may
then
be-
the code, you told the bank, ye code ka mera approval karna hai. And this, once you do that, between the bank and the mutual fund internally, they take about anything from 2 to 4 weeks to pass the and then it starts.
Okay.
Okay. Yeah, that way it is.
मोस्टली तो वो जो ब्रोकर साइट से जो अपन डीमैट अकाउंट खोलते हैं वहीं से हो जाता है कर रहा तो
क्या सॉरी क्या बोल रहे हो?
जिस ब्रोकर पे जिस प्लेटफॉर्म पे अगर अपन ने डीमैट अकाउंट खोले मोस्टली वहीं से वो डायरेक्ट कर देते हैं वो लिंक
हाँ,
Most
वो
of
भी
the
कर
time.
सकते हो. Okay.
Most
No,
of the time.
see, broker is different. Demat is different. See, Demat account is for your shares. You can also do mutual funds through that. Now, if you're doing through that, mutual funds, you can buy a direct plan, or you can tell your Demat account broker to buy it for you. So you can hold even direct mutual funds onto your Demat account. Now, I'll tell you about 3-4 years back, the Demat account people were crooks. They would not allow you to buy direct plans. ये पब्लिक प्रेशर एंड सेबी का प्रेशर के कारण नाउ दे हैव बीन फोर्स्ड टू अलाउ यू टू डू डायरेक्ट प्लान आल्सो ऑन देयर प्लेटफॉर्म. पहले नहीं अलाउ करते थे.
जैसे जीरोधा पे है सर डायरेक्ट
हाँ, no, Zerodha has been totally investor friendly. उसने तो it revolutionized the market, and it you know, it's like the Lenskart or Amazon or Flipkart, you know. So because of it, you know, so they changed the market dynamics. They give you so much cheap transaction cost that all the other brokers, you know, had to cut down their cost.
One more question. What are the advantages of small cap funds?
Small cap fund is that the money, when you give it to the company, the AMC, the money will go 65% will go into the small cap companies. Now, if you remember what are small cap companies, if you list all the companies from top to bottom, there are about 5,000 companies, then any company whose rank is 251 till 5,000 are called small cap companies. So these are small cap companies, you know, so they're a little risky because, you know, the company can close down there, you know, one event here or there, you know, rainfall nahi aaya, so it can impact them. But they're also volatile. They can zoom like this and all. So small cap companies, you should put small cap fund if you're looking for result 10 years later. That's what we normally say. So they'll give you the icing on the cake. You know? They'll give you fantastic returns, but beach mein wo yo-yo ke dolo ke it'll go up and down. So I hope you understand. That's a small cap. So 65% minimum will go into the small cap companies. The remaining 35% is at the discretion of your fund manager. He can put anywhere he wants.
Another question is whether stepping up the SIP is better or is lump sum a wise idea? Lump sum investment.
This is a very, very common question which I'm always asked. See, SIP is what you would do monthly, you know, so money will go every month automatically. Okay, lump sum is, so if you got some money with you, and so how do you decide what to do? Now, suppose the lump sum, like suppose you've sold some shares, and so if the money is coming from an equity entity, then you can buy lump sum. Okay, but if the money is from somewhere else, and if the money is huge amount of money and you feel you can't take that much of risk, then you can do an SIP, stagger it, or maybe 12 or 18 months, okay, in equal parts, so you don't catch a market high or a low. Okay, so that
which
kind of
one
thing.
is the better? Which
Sorry?
one is better? There is nothing which is better amongst them.
In the long run, 10-15 years later, returns are going to be the same. Okay.
Okay.
Yeah.
Doesn't matter.
But neither of them guarantee that you will get fantastic returns. SIP advantage is it gives you something called as rupee cost averaging. So sometimes you will buy more, sometimes you will buy less. Okay. Lump sum, suppose market peak pe you put lump sum and the market crashes after that, you will feel अरे क्या हो गया. So SIP reduces the volatility. Okay. So it's like that.
So long term, it will not matter even if we have some
In the
lump sum
long term,
amount
it
of
will not make
money.
much of a difference. 10, 15, 20 years doesn't make much of a difference.
So what is the best way to minimize capital gains after selling a property? Is another question from.
See, okay. Now, if you are selling a property and if you are buying a residential property, then you could put that money, you save tax. Okay. Now, if you are not buying a property, then you'll have to pay tax, or you can buy under Section 54 EC. You've got the capital gains bonds. Shreyas, you are off the screen.
Okay.
Yeah. Okay.
Now
So one, if you're buying only a residential property, then you can put the money directly. If you are not buying that, then you can buy something called as capital gains tax bonds. Okay, which is you can buy totally 50 lakh rupees and you have to put in the full money into that. You get about 6-7% on that, but that is taxable. My frank advice is pay tax on the gain money and invest it the money. That's the best. We'll get more returns. Pay tax, okay, whatever the tax is, 10%, 12%, whatever it is, and invest the money. That is the most simplest. Data studies have done to prove that. Unless you buy a residential property, pay tax, invest the money. That's it.
no need to put in the bonds, like there are highway bonds or agricultural bonds which are floated by
Tax-free bonds.
the tax-free bonds.
Yeah. That see, like for example, REC has, NHA, they also have capital gains bonds. Okay, but the returns are going to be about 6-7%.
Yes,
So
but
if
then
you
there
had
will be
paid tax on
free,
that and you invested, you've got 16-18%. So within 1 year, 2 years, whatever tax you paid would be taken care of, and then you get exponential returns. Okay, so simple thing is pay tax, invest the money. All the other options are not worth it. Okay, people get fooled. और इतना tax भरना पड़ेगा, नहीं भरना है tax. The mindset has to change. Pay tax, you will earn more in the long run.
That answers the question, I guess. How to? There is no way to minimize. There is better not to try to minimize the capital gains tax after selling the property. Just invest it, pay the tax, and invest it further somewhere else.
Yes, yeah. See, I tell you, because my talk was only for mutual funds, I did not talk about property and insurance and retirement. Okay, I did mention once or twice that you should have only one house in which you are staying. Any other house, any farmhouse you have, sell it off. Okay. As doctors, you are psychiatrist, I'm a nephrologist, so maybe I have my clinic, but you maybe like you've got a hospital, that is fair enough. But everything else, please sell off. I'm telling you, don't believe me. So you are staying in one house. Suppose some of you have a second house. Take the data of that house. Calculate its today value of if you sell it. Think when you bought it, and in that 5, 10, 20 years, how much did you spend on it? On the property tax, on the maintenance, on the brokerage, etc., etc. Okay, and factor that and see how much you got. And think if you had not bought the property 10 years back, you had invested it in the 10 years, the money would have become 3 or 4 times. And on top of it, if you have a house of say 1 crore and you want 10 lakh rupees tomorrow, what do you
Cannot
do?
get.
You can't sell
Cannot
the
get.
bathroom. You can't sell the bathroom बेचना है मुझे. Nothing. But if you got 1 crore in mutual funds, you want 10 lakhs tomorrow, you click. 2 दिन में 10 lakh बैंक में आ जाएगा. 90 lakh will be invested. And another
So
thing is when you are no longer there, your children will curse you for leaving property behind. I'm telling you from experience. Mutual fund, they'll be happy because it's digital online. It's very easy to do. They can sell, do what they want. Property में headache, अरे किसको बेचना है, कौन दिमाग लगाएगा? And the 2-3 children, they will fight among themselves. And if they're abroad, so they'll say, जाने दो, हमको नहीं मांगते, जाने दो.
It's a very practical solution.
And okay, another just one more thing. And if you got a farmhouse, people think farmhouse will go weekly, monthly. I know from experience, people शुरू में when they buy it, वो शुरू में 1 साल जाते हैं, उसके बाद साल में 1 बार जाते हैं. उससे बेटर उसके बाद बेच दो और फार्म हाउस जाना है, वो बेच के जो पैसा है उसमें once a year go to the neighboring farmhouse जो रेंट पे देता है उधर आके रहो ना and enjoy the money. No headache, no worries. उधर केयरटेकर रखो, कोई एनक्रोचमेंट नहीं हो जाएगा, उधर ये आ जाएगा, वो हो जाएगा, दादा आएगा, कोई all that headache is gone. And you can get a different farmhouse every year to stay. Enjoy different places to go also.
Sir, this brings to me a very practical question.
Yeah,
Let's be very frank on this platform that majority of us are having income in cash. है ना? At still a lot of people of us are having income in cash.
बराबर है. In fact,
But
that
then to
slide,
a deposit, then to deposit into account, then you pay taxes for that. Again, that is a bigger issue at
in
times.
fact,
Maybe
in
that
fact,
is the
Shreyas,
reason. Like,
I got your question. In my talk, there were 4 slides on black money, जो मैंने ये talk में delete कर दिए हैं. See, as far as possible, have minimum cash which can use for daily expenses वगैरह, घर का, clinic का वगैरह. बाकी pay tax. I'm telling you, trust me, you pay tax because I'll tell you what happens is you pay 30% tax, so 70% becomes white income. You invest it, you can show it and remains white forever. Mutual fund में तो you'll pay tax later on when you withdraw. Suppose you don't withdraw, वो बढ़ते जाएगा, your children will withdraw it. But if you got cash, okay, so what will you do with it now? So you will have to look for cash options. तो क्या खरीदोगे? Property में डालो जबरदस्ती, gold खरीदो, big things. And then what do you with the gold? Gold is an investment, पड़ा रहेगा gold की तरह. But if you had paid tax, 70% you had invested in mutual funds or whatever, that would go exponentially and remain white forever. People think that इस पे टैक्स भरना पड़ेगा, टैक्स क्यों भरेंगे हम? And that's what the problem is. So even if you get cash from a patient, you show it in your expenses, in your income, and do it. I'm telling you that data was there in the other slides. Okay, paying tax is much more beneficial in the long run, easily. Okay, तो black money मत रखो.
हमारे पास नहीं है, मेरे पास तो नहीं
और
है,
कम करो उसको, gradually कम करो. Okay, now if you got substantial black money, then your CA will help you how to make black का white. Okay, कुछ 20-30% खर्चा आएगा, वो एक बार कर लो, but आगे से फिर black money ज्यादा generate मत करो, cash generate मत करो much.
एनजीओ के थ्रू पलटाना पड़ेगा.
हाँ, but फिर जबरदस्ती कर रहे हो ना, तो मेहनत से कमाया और एनजीओ को दिया, इसे चाहे व्हाइट कर लो उसको और खुद एंजॉय करो ना फिर.
सही बात, वो भी.
Then you can do what you want.
I guess this answers majority of the common questions which we have.
I think we were in time also, I think.
We are almost done. Maybe I think we should have another session on equity, direct equity, somewhere down the line, the next month. Or
Direct equity, I don't suggest and don't do. But if you want, we can have a session on insurance, property,
Yes,
gold, mutual fund, and retirement and insurance. That we can have a small session. We can have on that sometime, maybe whenever you feel like.
Maybe we'll plan. So thank you, sir. Thanks for this.
Welcome. I hope you all benefited, enjoyed.
Enlightening session. I would like to request Thakre sir to please give the closing remarks and vote of thanks to sir. And if Bhave sir would like to add to something regarding the crux of the session first.
I would just like to say, I mean, it was fantastic. I mean, Dr. Manoj Agarwal is a powerhouse of information.
No. Nothing like that. I'm a self-taught, self-read person. I'm
No,
not an expert.
I mean, whatever it is, I mean, the quantum of information that you gave was fantastic. And I think this is something that perhaps deserves one full day seminar or symposium on.
If you have a physical conference, you can give me 2-3 hours. Like I told you, I was in Bangalore 2 months back. I was called by the Bangalore Orthopedic Society, and I was there they gave me about 2.5-3 hours, and I was taking a talk for them. So
Right.
if you have a physical conference, it's always better. Online, itna that interaction nahi hota hai. Physical.
Right.
So if you have conference, I'm willing to come and I'll give a talk.
Certainly. Dr. Manish, I think now that Dr. Manoj has very graciously offered to help us more, I think maybe under the same subcommittee, we can have maybe one or two more talks from him on retirement and things like that. Yeah. So thanks for, the offer to help us, keep on helping us more. Thank you so much.
Yeah. Thank you, sir.
Welcome.
Sir ने Sir, you have given us very good information to us about the financial wealth. Financial wealth is again which takes our mental agony. क्या होगा, क्या नहीं होगा, future uncertainties we can manage well. Having a आपका जो बात था वो हमारे ध्यान में तो आ गया, म्यूचुअल फंड, इंश्योरेंस, रिटायरमेंट प्लानिंग एंड इवन हैंडिंग ओवर, हाउ टू जो भी किया है वो किस तरह से हैंड ओवर किया जाए, ये भी एक थोड़ा सा इशू रहता है. नाउ वी आर इन मिडिल एज नाउ, तो ग्रेजुअली 8 to 10 years 20 years के बाद में क्या करना चाहिए वो भी एक थोड़ा सा इशू रहेगा. तो वी विल डेफिनेटली वुड लाइक टू लिसन और हियर फ्रॉम यू द एडवाइस ऑन दैट.
Sure.
And if possible, we would like to have a physical session
That would be very good.
At Nagpur, if possible. We will definitely have a consultation within our society, and would like to invite you for such kind of session.
I would love that. I would love that.
Yeah. Yes, sir. Thank you. Thanks again, sir. All the those who are all the listeners. I was being late for some time, and thank you.
But I don't think we started it after you came. That was okay.
Yeah. I could not hear from my laptop, so I have started on my mobile. Thank you, sir, for your information and good guidance.
Thank you, sir.
I thank all the thank Bhave sir for his insights and his and Shreyas for taking initiative and organizing all these things. And all the participants, I thank you for their time and listening to such kind of wonderful session. Thank you.
Thank you, sir. Okay,
Yes.
sir. Should we exit?
Yeah,
Yes, sir.
yeah.
Okay.
Bye-bye.
Thank you, sir. Thank you.
Bye. Bye.